All right, traders, a fairly easy day to be trading the SPY. Ended up going 6 for 6, 100% win rate. I'm going to be breaking down today's price actions and the trades. I'm also going to be sharing with you the newly updated plan for tomorrow. With that being said, I'm going to show you how to master the SPY. This is going to share with you unique perspective, how to trade the unique gap trading strategies that I've created, the gap fill strategy, the gap close reversal strategy. Let's get straight into it. So in terms of the SPY, this was an exact repeat of Friday, and I ended up trading this exactly how I traded this in Friday. For those of you who watched the video that I posted on, I believe, Thursday or Friday, that should have helped you a lot in terms of how to trade the SPY today. In terms of my analysis that I did end up giving out, I said right after market open, the most likable outcome is that we explode up to fill the gap from 409, which is exactly what happened. I ended up alerting calls at the exact low of day right here. I alerted that I was in calls at 9:37 a.m., sold for a nice win. I did that several times on the dips. I had 5 nice winning trades on calls, buying the dips, bottom ticking, selling into the rips. And then I had 1 trade on puts, just a quick scalp, quick win. So I'm going to show you how to master the SPY. I'm going to show you how to trade this both ways. The polls within Trader Society were absolutely phenomenal. We had 63 people green today and nobody was red. And in terms of, Thursday, we had 63 people green, only 5 were red. So the results ended up improving, in my opinion, because this was the same exact repeat as, Thursday. And I gave out a very, very good video on Thursday teaching people how I was able to trade the SPY, and I did the same exact thing. So let's get into it. Towards the end, I'm going to share with you my newly updated plan on the SPY. So stay tuned for that. Right now, we're going to get into the recaps. We're going to get into the trades that I ended up taking, right? So in terms of the SPY, first things first, 30-minute chart, a lot of confirmations. So you guys know, like I mentioned in the video I posted, not the last one, the one before that, the recap, when SPY gaps down, when it opens up lower than it previously closed, right? So this white line is the previous closing price. It opened up much lower. So when it does that, we don't focus on buying puts. We focus on buying calls, playing for the gap to fill above. And we don't try to ride this up for the gap to fill above. We just take a very, very quick scalp in and out, look for a quick 20, 50 cent spike in our favor on SPY, and then we sell into the rip and we're buying into the dips, right? So how can we successfully buy the dips? How can we successfully take advantage of this bullish potential trend where it starts to fill the gap, right? And the reason why we don't buy puts when it gaps down is because it's gonna try to create a bear trap, because SPY is gonna try to attempt to fill the gap, and it's at support, and it's a terrible level for puts. In terms of puts, we wait for the gap to close. That's where we look to potentially buy puts for a quick scalp. And I did buy puts right here at $409.19, exactly at the gap, alerted that in real time. All my trades were alerted real time. And then I sold those puts into the dip, made a very, very nice win on that. So with that being said, let's break this down. So we knew the SPY had a ton of support at 406 and even slightly under 406. That was the key support zone. Now, in terms of pattern recognition and trend recognition, one of the reasons why I decided to buy calls, it was at the best support level possible, and there was a gap to fill above. It just made sense. They're going to try to trap the bears at the open. So on this nice dip at 9:37 a.m., that's when I alerted. I saw this bullish trend reversal doji bottom pin at key support, and it was practically the best support level with very little risk under, because we would use like a tight mental stop. We don't hold our losses. We cut them extremely quickly. So that's why I decided to buy calls, and then I just sell into the rip. And then why did I continue to keep on buying calls on the dip? So the 30-minute patterns. The 30-minute patterns were some of the main reasons why I kept buying calls on the dips, right? So when I'm buying calls, I'm looking at ideal entries with 30-minute candlesticks on dips towards key support levels, and I'm buying when the candles are red, so I get the best price. I don't wait for them to flip green and bullish in a sense. So in terms of some bullish patterns on the 30-minute chart that told us the SPY was going higher, I'm going to show you some examples. So right here, what we're going to do is we're going to compare today's 30-minute chart to yesterday's and then the day before that, right? So to Thursday's and then Wednesday's chart. So you see right here, you have like this red kind of trend reversal middle candlestick, and it's at the bottom at support. What happens when SPY forms that red middle trend reversal candlestick at the bottom at support? Well, you could see it form the same candlestick right here at the same price. What did it do when the next 30-minute candle opened up? You could see right here, it had a massive spike. And in terms of where it bottomed slightly above the low of the previous 30 minutes. See how it bottomed slightly above the low, right? So when I saw this drop back towards the low of this 30-minute here, I was buying calls. I was buying calls to the open. I was buying calls when it dropped towards the lows, and I was selling into the spike, and I was selling into the spike. So that pattern repeated itself. See how this left right here compared to this right side right here is identical? The only difference was it didn't close as strong. The 30-minute candle closed weak, and the 30-minute candle closed strong here. That was the only difference. But I'm not holding till the closing of these candles. I'm just selling into the spikes, scalping this in and out at the money strikes. And one way you can fight theta decay is by going with like a 7-day expiration where there's practically no theta decay if you're scalping and not holding, right? Because we don't hold our hopes. We don't hold trades very, very long. We get in and out within minutes, like it's usually like 5 minutes max, very, very quickly. So if I think a 30-minute candle is going to be bullish for the next 30 minutes, like this pattern told me, instead of buying and holding calls for 30 minutes, I would just buy the dip, sell the rip, and I would do that like 3 times. I would look to do that about 3 times on nice dips. And if it just keeps ripping and doesn't have those nice dips, then I don't do it. Now, what was another 30-minute pattern that you could have used to buy calls again? This was another one. So you could see right here, see how the SPY on this 30-minute candle, this is another reason why I bought calls again. I'm going to explain to you why. So understand what we're doing. We're waiting for these 30-minute candlesticks to close, and then once they close, they're going to help tell us the opening pattern of the next one, and then we take advantage of the next 30 minutes with that side, whether it's bullish or bearish. So see how the SPY has like this this bottom, this like top type of wick at support, and then see how SPY has this top type of wick at support. See how again, same type of candlestick, same pattern, same price. What happens after that? It explodes up and it breaks out. This is why, again, when the 30-minute candle opened up, I ended up buying calls. And in terms of one difference was, see how on this pattern it retraced back to the lows? Well, on this pattern, it bottomed at the opening price. It bottomed, not at the opening price. It bottomed at the closing price of the candle. Where this candlestick closed, it bottomed at the closing price. On this pattern, it bottomed under the closing price towards the lows, right? So I pay attention to that. I pay attention to what the candlesticks say. Well, where does it potentially bottom at? Does it bottom at the closing price of the previous 30-minute? Does it bottom at the low of the previous 30-minute? These are all things I look for confirmations that that pattern is actually going to repeat itself, right? So another confirmation as well as if you look at this pattern when it formed this red, type of trend reversal candlestick, it ended up spiking. It had multiple spikes every 30 minute. And then here we go again, multiple spikes every 30 minute, right? So I hit calls again due to those two patterns. Another successful trade. Now, in terms of the trade after that, why did I decide to do calls again? I did calls again one last time here. Why did I decide to do calls again? The reason why is when SPY forms like this, this double type of like wick like this, what does it do? It spikes and it breaks out. It spikes and it breaks out, right? And then from there, I called it. So once this was getting into like that 407.50 range towards like the middle of the zone, so the low of the zone was like 406 and under 406 barely, and the gap was at 409. So once we got to the middle of the gap, the middle of the zone, I told myself, I'm going to stop milking the trend. I don't want to trade in the middle. And zombie hours coming past 11 a.m. People are going to take their lunch break. Zombie hours coming. It's going to be choppy. It's going to be slow. It's going to be a lot of flip-flops. I'm just going to call it. By then, I already had 4 wins, and I called it. And then from there, I had 2 wins on puts, and that was about it. But that's what you have to do, man. You have to learn when to call it. You want to avoid the middle. I would recommend focus on trading the highs and the lows of the channels and disregarding the middle. See how the middle, it tries to flip bearish, and then it's another bear trap and explodes up higher. It's a lot of nonsense, man. Avoid the middle, poor risk to reward ratio. But you could just see, man, there was several patterns. You have this nice green bullish 30 minute. You have this nice green bullish 30 minute. What does it do after that? Nice 30-minute uptrend, nice 30-minute uptrend. Just so much history, so much confirmation. If you were to compare the left to the right, if you were to compare the past, 3 trading days on the SPY within this channel using these 30-minute candles, you could have done very, very well if you utilize the 30-minute patterns the proper way, like we ended up doing today. And then in terms of my trade for puts, so like I said, I called it in the middle because I didn't want to trade the middle. And when I'm trading a trend, I don't want to milk the trend. I just want to get in towards good entries and then, just call it after a couple trades. So that's what I did. And then in terms of my trade for puts, I waited several hours for puts because, like I told you guys, we don't buy puts when SPY gaps down. It's oversold. It's going to try to explode up to fill the gap. I don't want to get trapped in a bear trap. I wait for the gap to fill. So I like doing this on initial reactions. And what I ended up doing was, as soon as SPY filled the gap, I was looking for puts. So when it filled the gap, I said, okay, the gap is now filled. It's at one of our best prices. Let's see how it reacts. As soon as it filled the gap, once it had this like green to red move, as soon as this went from green to red and it was closing weak, I bought puts. And then I sold a minute later into this 30-cent drop and I made $1,500. In that 30-cent drop, I made a $1,500 profit. That's the power of options. And then from there, I called it. That was it. That was the day. I had the little gap close reversal. I called it, and I had no interest in doing it again. I played the initial reaction, very, very quick, in and out. We actually had one of the traders in Trader Society call that this was going to go to 410, and after hours it hit 410. That was a nice call. But that's how we traded the SPY. That's how you can master trading the SPY by using 30-minute candles, by understanding where the channels are, by understanding 30-minute candlesticks, by avoiding the middle, by scalping in and out on initial reactions very, very quickly like a sniper. So now let's discuss for tomorrow, right? So let's discuss for tomorrow. So in terms of how the daily candlestick looks, we have like 2 identical like green bullish candlesticks. It's not telling me too much. I don't see SPY do this very often. It keeps bottoming at 406. It could likely just be something like this. It's just going to keep trying to trade in a channel. So it just trades in the overall channel it's been trading in from like 406 to 410. Or it just breaks above 409.60 and goes super bullish to 413. So those are the 2 possible case scenarios. It either sits in a channel or it just breaks out. I don't really see it breaking below that channel. I could see it retesting and then exploding back up on Wednesday. I could see that happening. But those are the 2 possible case scenarios that I'm really looking at. It just it trades back down towards the bottom of the channel, probably closes weak, or they turn the previous closing price 409.61 to support and we explode up. So we shall see tomorrow, right? So it is our job and our responsibility to identify our key levels and to identify if it's reacting as a floor and if it's reacting as a resistance level, right? So let's focus on this. In terms of our channel, this is what we know. We know the top of our channel is towards this 409.30 level, 409.30. Our new key level that we're going to be eyeing on is towards the top of the channel, 409.61. So understand, when a stock's at the top of its channel, it's not the most attractive price to be buying calls. Now, it could be if it turns into a floor. It could literally be the low of day for tomorrow. It's possible. But we know in advance it's not attractive and it's not a desirable thing to be doing. But we're not going to blindly buy puts just because it's at the top of the channel. We need some sort of bearish 30-minute confirmation. I mean, the 30-minute chart is an absolute beauty. Look at this. Every single time it's trending up, first 30-minute candle's red, there's the reversal. It's trending up, first 30-minute candle's red, there's the reversal. It's trending up, first 30-minute candle's red, there's the reversal. It's trending up, 30 minutes starts to turn red, there's the reversal, right? It works fairly well. But that's one confirmation I'd recommend using for reversals as well, is 30-minute candle reversal flips. But anyways, these are going to be our key levels for tomorrow. So we understand we're towards the top of the channel. This is one thing that I do want to keep note of as well. So 409.61, this is going to be our key level for tomorrow. 409.61, closing price of today, previous closing for tomorrow. So 409.61, this is going to be our new key level. If this reacts as a floor, super bullish, super bullish. You could already see it's breaking out. And if you look at the 30-minute chart, bullish wick, bullish wick, bullish wick. it's reacting as a floor. This is what we know in advance. Extended hours is very, very important. They're trying to turn this extended hours resistance level into support. They're trying to turn this bearish gravestone doji at the top of the channel resistance, super bearish confirmation in pre-market, then it collapses, right? I tell you about that all the time, that gray candlestick, bearish reversal, into support, into a floor. So it's flipping bullish. We see that. It's breaking out. It's turning it into a floor. It's pulled back from its breakout levels, and it's confirmed that it's a floor. It's reacting bullish so far. Now let's go to, so if 409.60 holds, these are the next levels that we go to. The next level that we go to, if 409.60 holds, is going to be this level right here. Pre-market support. Pre-market support that cracked, that really hasn't been tested. This zone. 410.50 to 411.30. That's the pullback zone. Initially, they're going to try to pull it back in between that zone initially. Doesn't mean it's bearish, but for a scalp, they will try to pull that back initially for a scalp. If they ever break above 411.30 and turn that into a floor, then we go to 413 to 414 zone. That would be the best possible level for puts, is at 414. And like I said, if we fill this gap, there's a gap to fill right here. You can see the empty space at 414, and SPY forms like a bearish pin, a bearish doji, a red bearish candlestick at 414, which is not determined and confirmed until the market closes. So you got to wait to see how the daily candle closes and how it looks right before the closes to get it on your swing trades, right? So you use confirmation on that. But if we see that form at 414, that is where I will personally hit puts with very heavy size for a swing trade. And that's the swing trade that I've been waiting on. I just need a bearish confirmation at 414. So I need it to be closing bearish into the market close, right? It needs to look bearish like this. This is bearish, this is bearish, this is bearish, something like that. This is bearish. So yeah. So that's your upside potential levels, right? So we already discussed if 409.60 reacts as a floor, then it's bullish, and we go to the next zone. The next zone is 410.50 to 411.30. Initially, it's going to try to reject. If it ever forms a floor and breaks above 411.40, so if you see a break above 411.30, it forms a floor. Super bullish, move to 413 to 414, right? Now, let's discuss downside potential. So in terms of your downside potential, if 409.60 cracks, reacts as a resistance level, we go to this level right here. This 408.70 make or break support. If it cracks 408.70, then big sell off back to 406.50. So in terms of your cheat sheet, you can write these levels down. 414, best level for puts, also a swing trade for puts if we get bearish confirmation. Below that, 413. Below that, we have a zone 411.30 to 410.50. Below that, 409.60, our closing price, very special level, and that's towards the higher end of the channel now. And then under that, we have 408.60 make or break support, and if that cracks and reacts as a resistance, then we have a nice drop to 406.50, right? That's your overall zone, right? So basically those levels, if one of those levels reacts as a floor, as a support level, we spike up to the next level. If one of those levels breaks down, reacts as a resistance level, as a roof, as a ceiling, then we drop down to the next level. And we only play for one level max, one price target max. And I don't even hold for that one. I get in and out very, very quickly before those levels even hit. And if you're wondering like, well, you know, based off of all those levels, well, what do you like to focus on? I like to focus on the lower levels and then the higher levels. I try to avoid the middle. But if the previous closing price is in the middle, I will keep a sharp eye on it. So my main interest would really be that 414. I'll keep an eye on that zone as well. I'm a little interested in the zone of 410.50 and 411.30. 409.60 is going to be my top watch. And I'll keep an eye on 408.60. Not interested in trading that though. I'm interested in terms of trading 406.50, 409.60, 410.50 to 411.30. Not interested in 413, and then 414. So my main levels of interest in actually placing trades: 414, 410.50 to 411.30. That zone, 409.60, and 406.50. Those four levels, technically five, but one's a zone, are my key levels to be trading at for tomorrow. So it's going to be a phenomenal day, folks. SPY has been fairly easy to be trading lately. It's been channel trading. We love channels. We love chop, man. This type of price action that I love, or just nice bullish trend days or nice bearish trend days. But with scalping, man, the beauty of scalping is where you just get in and out within seconds to minutes. You can trade it all. You can trade every single day. That's the beauty of it, because there's always opportunity in terms of scalping, right? Because you don't hold. If you were to hold, you'd be very disappointed in a choppy day. If you're holding something for a long period of time, you either want it to be a super bearish day or a super bullish day. But if it's choppy and slow, you can do very, very well scalping. If it's a bullish day, you can do very well scalping. If it's a bearish day, you can do very well scalping. So here's the deal, man. The spots are almost filled up, guys. Trader Society, we're going to be raising the price. It's a one-time fee. It's a lifetime access. If you do want to be a part of Traders Society, it is going to be that first link down below in the description. It's a one-time fee, lifetime access. You get access to the Discord. You get access to every single real-time trade that I take. It's alerted in the SPY floor. It's also alerted in the best setups, the best price when I take those. You get access to my watch list, my daily stock analysis, my key levels. I will answer any question you may have. You also get access to the Discord chat room, the networking opportunities within the chat room, private direct messaging, and of course, the video lesson library in the course that teaches you everything it is that I know about the stock market, price action, the unique trading strategies that I've developed, the gap trading strategies, risk management, position sizing, and psychology. If you want to learn how to become the best trader that you can possibly become, this is going to be the right program for you, and we have a great team waiting for you. So the deal is we're going to be raising the price as soon as the spots fill up. There's still some spots left. It's going to sell out very, very fast. By the end of this week, it will be sold out. If you want to join, now is the best time to join. Once the spots fill up, which will be very soon, we will be raising the price. With that being said, I will see you guys tomorrow live at Market Open.